Right now, the world is carrying a debt of more than $300 trillion. Think about it, that's almost 3 times the annual income of the entire world. The United States alone owes $36 trillion. Hearing such a massive number, the first question that comes to mind is, if every country is in debt, then who is this money owed to? Who is lending such enormous sums to these big nations? It sounds like a simple question, but the answer is much more complicated. Because in today's world, debt doesn't move in straight lines. It moves in circles. One country borrows from another, the second borrows from a third, and eventually the flow of money circles back to the first. People often point fingers at China, saying that America owes most of its debt to China. Yes, China does hold about $750 billion worth of US bonds. But the truth is that China itself is drowning in more than $18 trillion of debt, and that debt is largely owed to Chinese banks. Those same banks also buy American bonds, meaning China is lending to the US is borrowing from China, and both countries' banks are buying each other's bonds. So, what exactly are these bonds? In simple words, a bond is like a written promise. A government or company takes money from you and gives you a piece of paper stating, "We will return your money with interest after a certain number of years." That's a bond. For investors, it's an investment. For governments, it's a way to raise funds. And this isn't just the story of 2 countries. Across the globe, every country is both borrowing and lending. The system works like a spinning wheel. And this isn't just about money changing hands, this is the very engine that keeps the global economy running. But how did all this start? Debt itself isn't new. It's as old as human history. Before coins existed, people lent things on trust, take it now, return it after the harvest. Simple. Slowly, borrowing grew into something larger, especially for kings and rulers. When wars had to be fought, palaces built, and taxes weren't enough, governments sold bonds to the public for the first time. People gave money to governments in exchange for a piece of paper, a promise that after some years the government would return their money with interest. This was the birth of modern debt. Then came the 2 world wars, followed by the Bretton Woods Agreement of 1944, which made the US dollar the backbone of the world's financial system. But as expenses grew, gold reserves ran out. In 1971, the US abandoned the gold standard. From then on, the dollar has been backed only by trust, not by any tangible asset. And that's when the real debt storm began. Now, governments could print money for almost anything, building schools, repairing roads, or pulling the economy out of recession. For example, of America's massive debt, about 70% is owed to its own citizens, banks, and companies. That means the government borrows from its people, promising to pay them back with interest. People deposit money in banks, banks use that money to buy bonds, and in this way, the government gets its loans. The same cycle runs in India, Europe, Japan, everywhere. Insurance companies, pension funds, and mutual funds also lend to governments because they need reliable investments. So when we say the world owes $300 trillion, it's equally true that this money is also sitting in the hands of the world's own people, companies, and banks. In reality, debt is a giant web that ties together nations, banks, and citizens. Now the big question, is debt really necessary? Can a country not survive without borrowing? The truth is, debt is not always bad. In fact, when used correctly, it's one of the most powerful tools for national development. Think about it. Suppose a government doesn't have enough money today but needs to build schools, hospitals, roads, or railway projects. These projects will generate returns over many years, but they require money immediately. The government can borrow now, build those assets, and later repay the debt through taxes. This is called productive debt, borrowing that fuels growth and income. Take Japan, for example. It has the highest debt to GDP ratio in the world. Yet, when you look at its roads, trains, technology, and quality of life, nobody would say Japan is bankrupt. That's because most of its debt is owed to its own citizens and banks, and the money has been invested in infrastructure, innovation, and growth. India, too, borrowed significantly after COVID-19 to fund infrastructure and digital projects, and this helped GDP growth bounce back strongly. So the real question is not whether debt is good or bad. The real question is, was the debt used wisely? If governments use debt for productive purposes like schools, roads, or improving the business environment, it can boost the economy rapidly. But if the money is wasted on subsidies, election freebies, or harmful schemes, then the country keeps paying interest without any real benefit. That's when debt becomes a burden. Debt also builds trust between governments and their people. Think about it. When an ordinary citizen buys a government bond, they're essentially saying, "I trust my country to return my money." This trust keeps the economy alive. But if that trust breaks, as it did in Sri Lanka or Argentina, countries fail to repay their debts, run out of dollars, and people suffer from inflation and poverty. That's why the global economy rests on a delicate balance. Too much debt is risky, but too little debt can stall growth. What's needed is smart debt, borrowing with foresight, planning, and investments that benefit future generations. In the end, today's modern world is built on just one idea: trust. Trust that if I lend today, I'll be repaid tomorrow. Trust that governments will keep their promises. Trust that the system will keep moving. But as global debt keeps rising, the question is, will that trust always hold? What do you think?